Good afternoon, ladies and gentlemen. My name is Russell Higgins and I'm the Chairman of Argo Global Listed Infrastructure Limited, which we refer to as Argo Infrastructure or ALI for short. On behalf of the Board of Directors, I'm pleased to welcome you to the 6th Annual General Meeting of the company and to report on its operations and financial results for the year ended 30 June 2021. As you are aware, this year's meeting is again being conducted virtually as we comply with the prevailing COVID-19 health advice and restrictions. I regret that we're unable to meet with shareholders today in Adelaide, and I'm hopeful that shareholders will be able to attend next year's AGM in person. As we webcast this meeting live via the Lumi platform, shareholders and proxy holders have the ability to ask questions and submit votes. We assure you that every effort has been made to ensure that the meeting runs smoothly and without technology issues. If you do experience technology difficulties, a recording of the meeting is also available on our website later. Questions can be submitted at any time, and I will address the questions for each relevant agenda item. To ask a question in writing, please select the messaging tab at the top of the Lumi platform. Within that tab, there is an Ask Question section for you to type in your question. Please state the agenda item to which the question relates. Once you've finished typing, please hit the arrow symbol to send. I request that you keep your questions short so that as many shareholders as possible have the opportunity to ask a question. Our Company Secretary, Tim Binks, will moderate the question facility and may combine similar questions for efficiency. Joe Chipperfield, our Legal Officer, will read out the written questions along with the shareholder's name. For shareholders who wish to ask a verbal question, an audio question facility is available during the meeting. To use this service, please dial the number shown on the main Lumi platform information page. Enter the meeting ID followed by the hash key. You will be asked for a participant PIN. However, simply press hash again to join the call. To ask a question, press *9 to signal the moderator. Once your question is answered, your line will be muted. We will answer online questions first, followed by any telephone questions. I'll now begin the formalities. I have been informed by the Company Secretary that the meeting has been convened in accordance with the temporary modifications of the Corporations Act and the company's constitution. A quorum is present and therefore I declare the meeting open. A disclaimer is displayed on the screen, and it's important to understand that the information to be presented today is general information only and is not a securities recommendation or statement of opinion intended to influence any person in making an investment decision. You should consider seeking independent professional advice before making any investment decision. I'm pleased to introduce my fellow non-executive directors, our Managing Director, our Company Secretary, as well as one of the senior portfolio managers from Cohen & Steers. Joycelyn Morton. Joycelyn joined the board on incorporation in 2015 as a non-independent non-executive director. She's highly qualified in financial matters, following an international career specialising in accounting and tax. She is a member of the Audit and Risk Committee Joycelyn has also been a non-executive director of Argo Investments since 2012.
Good afternoon, ladies and gentlemen.
Andrea Slattery. Andrea joined the board in 2015 as an independent non-executive director. She has worked extensively in the financial services industry and played a key role in the growth and recognition of the self-managed superannuation fund sector in Australia. She is a member of the Audit and Risk Committee.
Good afternoon, ladies and gentlemen.
Andrea is standing for re-election today, so we'll hear more from her later on in the meeting. Mark Hall. Mark joined the board as an independent non-executive director in 2019. He had an extensive career, including over 20 years with Telstra Corporation in senior finance roles. Mark is chair of the Audit and Risk Committee.
Good afternoon.
Jason Beddoe, our Managing Director. Jason was appointed ALI's Managing Director on incorporation in 2015. He is also Managing Director of Argo Investments Limited. Jason has an engineering degree, and prior to joining Argo, he worked in the stockbroking and mining industries.
Good afternoon, everyone.
Jason will deliver his Managing Director's address later in the meeting. Tim Binks, our Company Secretary. Tim was appointed ALI's Company Secretary when the company was formed in 2015. He is also the Chief Operating Officer and Company Secretary of Argo Investments Limited. Tim has experience in chartered accounting, funds management, stockbroking in Australia and overseas.
Good afternoon.
Ben Morton, the Senior Portfolio Manager. Ben is the head of Cohen & Steers Global Listed Infrastructure team and is responsible for managing ALI's portfolio. He has over 20 years infrastructure-related investment experience and manages a number of major accounts for Cohen & Steers clients around the world. Given travel restrictions and the time difference to New York, we've recorded a question and answer session with Ben regarding the global infrastructure sector, which we will hear later in the meeting. We will now move on to the meeting procedures. All resolutions at this AGM will be decided by poll, and I'll shortly open the polls for all items of business. Once the polls are open, if you're eligible to vote at this meeting, a voting tab will appear on your screen. Selecting this tab will bring up the list of resolutions and present you with voting options. To cast your vote, simply select one of the options. There's no need to hit a submit or enter button, as the vote is automatically recorded. You have your ability to change your vote up until the time I declare the polls closed at the end of the meeting. I now declare the polls open. The final results of the polls will be released in an ASX announcement later in the day. I report that the minutes of last year's annual general meeting were confirmed as a correct record at the subsequent meeting of directors. The notice of meeting of this year's AGM has been circulated to shareholders, and I propose to take it as read. We will now move to the first item of business. Item 1 on the agenda concerns consideration of annual financial statements and reports. The audited financial statements of the company and the reports of the directors and the auditor for the year ended 30 June 2021 have been published and made available to shareholders. In the course of receiving and considering the financial reports, I will now make some general comments about the year under review. This will be followed by a brief address from our Managing Director, Jason Beddoe, and the Portfolio Manager's commentary from Ben Morton of Cohen & Steers. Although the COVID-19 pandemic is still impacting our everyday lives, it is somewhat comforting that since last year's AGM, there are now effective vaccines and more than 70% of Australians aged 16 and over are now vaccinated. It was in the second half of 2020 that successful vaccines were first approved in the United States and mass manufacturing commenced. Global share markets reacted extremely positively to this development as investors chased growth and other stocks which would benefit from reopening economies, while shying away from the infrastructure sector's more defensive qualities. However, the path to reopening has not been as smooth as markets exuberantly priced in initially, with the Delta variant of the coronavirus leading to further lockdowns in many countries. Throughout this period, global listed infrastructure has provided steady gains and importantly been true to label, whilst broader equity markets have raced ahead, albeit with some volatility. Argo Infrastructure's investment approach, business model and operations have remained unchanged throughout the pandemic, and our people have been able to work remotely as required. For financial year 2020, Argo Infrastructure reported a profit of 18.8 million. Whilst the dividend payouts from broader global equities fell sharply due to the pandemic, the income generated by our portfolio was only slightly down on the previous year, illustrating the resilience of infrastructure returns. Argo Infrastructure remains in a strong financial position, with more than 350 million in assets at 30 June and no debt. The company was again able to raise dividends this year, increasing full-year dividends by 6.7% to 8 cents per share, fully franked, representing another record high payment to our shareholders. Argo Infrastructure continues its track record of generating sustainable total returns to shareholders, with dividends paid since inception now totaling 32.25 cents per share. Furthermore, this year's final dividend was the 7th successive fully franked dividend. A key benefit of investing in international assets through our Australian listed investment company, or LIC structure, is our ability to generate franking credits for Australian investors when we pay company tax in Australia on income received and on realised gains. Argo Infrastructure's dividends are derived from realised gains on sales from the portfolio and from the dividends received from the companies in the portfolio. Dividends are not paid from unrealised gains. This helps safeguard the sustainability of future dividends, as well as the capital position of the company. The global listed infrastructure sector returned a solid increase of 8.7% for the financial year, while Argo Infrastructure's investment portfolio rose by 9.2%, providing another year of index outperformance by our portfolio manager, Cohen & Steers. The Australian dollar appreciated from 69 US cents to 75 cents over the financial year, providing a headwind to our returns. Nevertheless, every one of the 10 infrastructure subsectors generated positive returns in Australian dollar terms. The more economically sensitive subsectors were the strongest performers during the year, with marine ports jumping 53%, midstream energy up 27.5%, and railways up 16.1%. In contrast, the performance of the more defensive subsectors, such as utilities, were subdued, with water up 2.1%, gas 3.6%, and electric up 4%. The share prices of many listed infrastructure companies, which invest in global equities, tend to trade at substantial discounts to NTA due to a number of factors. In mid-2018, Argo Infrastructure shares were trading on the ASX at a discount of around 15 to 20% to NTA. At that time, the company was in its early stage and was just starting to establish its reputation. Since then, our track record of increasing reliable, fully franked dividends and continued portfolio outperformance have contributed to a substantial progress in reducing the difference between the company's share price and its net tangible asset backing per share. By August 19, the discount was under 10%, and now it's around 2 to 3% and often trades at parity with NTA. Argo Infrastructure's demonstrated track record of performance has also occasioned a lift in our research ratings. Independent investment ratings firm Lonsec recently published its latest research report on Argo Infrastructure, upgrading the company from investment grade to recommended, the second highest rating offered by Lonsec. In addition, independent investment research also initiated coverage of Argo Infrastructure in August, and they also assigned a recommended rating. Earlier this month, we offered our second share purchase plan, or SPP, to shareholders. These offers are very popular as a way of increasing your holding by up to $30,000 without the need to pay brokerage fees. The SPP was well supported, with 2,460 shareholders, or 26.4% of our shareholders, participating to raise $31 million. The additional funds were able to be invested almost immediately, given the large and liquid nature of global listed infrastructure sector. Over the past 20 months, we've seen a period of massive fiscal stimulus, at or near zero interest rates, and large quantitative easing or bond buying programs by central banks. We may see some volatility in markets as these policy settings are unwound. It is during periods of volatility that the relatively stable and defensive characteristics of infrastructure tend to be noticed most. Although the threat of inflation and higher interest rates will impact some infrastructure subsectors, President Biden's US infrastructure package, currently in consideration in the Congress, and tax changes will be a clear positive. Longer term, we see secular trends such as the digital transformation of economies and the transition to renewable energy to be significant drivers for the infrastructure sector. As a closed-end listed investment company with no debt, Argo Infrastructure is well placed to benefit from the long-term growth and income potential of the global listed infrastructure sector. In conclusion, I'd like to thank Jason Beddoe and his team for their ongoing efforts. It's been a difficult year and people have adapted well and shown great resilience. I'd also like to thank our portfolio manager, Cohen and Steers, and the firm's team of investment professionals based in offices around the world. It's been difficult for them all. I'd also like to thank my fellow board members for their valuable contributions to the company through what has been another challenging year. And most importantly, I sincerely thank our loyal shareholders, and to our new shareholders, welcome to Argo Infrastructure. I'll now call on Jason Beddoe to deliver his Managing Director's address. Jason.
Thank you, Russell. Recent high-profile takeover bids for several Australian listed infrastructure companies has brought the asset class back to the forefront of investors' minds. As options to invest in infrastructure via the Australian Securities Exchange potentially dwindles, it has sharpened the focus on offshore opportunities to gain exposure to the asset class. Australians have long had opportunities to invest in domestic listed infrastructure companies. In fact, Australia was at the forefront of the asset class with the privatisation of numerous high-profile government-owned assets, particularly toll roads, airports and utilities. However, with Sydney Airport, Spark Infrastructure Group and AusNet Services currently subject to takeover bids, opportunities for Australians to invest in domestic listed infrastructure is likely to diminish. If successfully completed, these transactions would reduce the aggregate market capitalisation of ASX listed infrastructure companies by approximately 30%. And furthermore, there would be less than 10 Australian listed infrastructure companies remaining. Conversely, there are over 30 times more listed infrastructure companies outside of Australia, with a combined market capitalisation roughly double the size of the ASX. Globally, the asset class is highly diversified. It spans both developed and emerging markets and offers exposure to a range of infrastructure subsectors not represented on the ASX, such as water utilities and communications towers. As the world continues on the path of decarbonisation, many of the world's large listed energy utilities are deriving a significant portion of their revenues from renewable power generation. Shortly, you will hear from Ben Morton, Head of Global Infrastructure at Cohen and Steers, which manages Argo Infrastructure's portfolio. He will describe how merger and acquisition activity in the Australian infrastructure space is part of a broader global trend, reflecting the strong demand for high-quality infrastructure assets globally. Also, the factors driving this demand, as well as other thematics currently impacting the asset class. With its listed investment company structure, LIC, Argo Infrastructure provides a simple, straightforward access to this large and diverse global listed infrastructure universe. It has been a challenging year, and I'd like to thank the hardworking Argo team responsible for managing Argo Infrastructure. Also like to acknowledge the contribution from the chairman and non-executive directors and look forward to seeing them face-to-face sometime in the future. I wish all our shareholders well for the coming months. We thank you for your continued support and the trust that you have placed in us. And I hope we can meet with you in person sometime in 2022 also. So I'll now hand over to Ben, or the video of Ben, who has recorded some comments and answers of some of the more commonly received questions they receive on infrastructure.
Hi, it's Ben Morton at Cohen & Steers, Head of Global Listed Infrastructure, here to talk to you today about the asset class in general with some specific questions around the outlook. So first, as economies reopen around the world, there are numerous impacts on the infrastructure asset class. When you think about the most economically sensitive subsectors within the asset class, they have been the best performing over the course of 2021. So marine ports, for example, as we've seen economies reopen, we've seen greater throughput volumes at marine ports, and that's translated into those businesses being the best performing within the infrastructure universe from a stock price performance standpoint in 2021. The second best performing subsector has been midstream energy, which frankly is an indirect beneficiary of improving economic conditions as demand for energy and energy commodities has remained strong. That is a good thing for the assets that transport and store these commodities because they are throughput based in terms of their outlook. A second bucket of companies that is impacted by reopening and improving economic conditions is passenger transport, which on a year-to-date basis has really lagged from a performance standpoint. But we have started to see some green shoots in terms of passenger volumes, people returning to airports and flying again in many parts of the world, although there's quite a bit of dispersion depending on geography. And also toll roads, where toll road traffic in some parts of the world is back to levels that are above 2019. And then, the third bucket, I would say, is what I describe as pandemic beneficiaries, which are notably the telecom infrastructure companies, which were large outperformers in 2020 and have been decent performers this year, but have lagged a bit of late as we've seen sort of an acceleration of the reopening trade and the inflation beta trade in the broader equity markets. Several key themes are impacting the asset class today. Dry powder and M&A associated with that dry powder, inflation, and fiscal stimulus. First, on the M&A front and private infrastructure dry powder, over $300 billion has been raised. We're seeing that capital getting deployed quickly this year with a record number of deals that are impacting the listed infrastructure asset class. Notably, several deals of late just in the last quarter in Australia for assets like Sydney Airport and Spark Infrastructure. But there have also been numerous deals, dozens of deals in other parts of the world, whether it's for entire infrastructure companies or assets that are sold by listed infrastructure companies to private funds, or stakes in assets that are sold by these companies. So this theme is not going away. That money continues to be raised and it needs to find a home in infrastructure assets. Second, it's inflation. Clearly, inflation has been a key theme in the capital markets this year, with inflation likely ahead of most people's expectations. This is a unique feature of the infrastructure asset class, that many businesses can pass through those higher costs associated with inflation to customers, which tends to protect the asset class from a performance standpoint in periods of unexpected inflation. And then lastly, fiscal stimulus. A lot of attention on fiscal stimulus, particularly here in the US right now, with infrastructure-focused stimulus as a catalyst. But we've seen these types of packages in many parts of the world. And what's unique about this round of fiscal stimulus focused on infrastructure is that there are many ways in which it can directly impact infrastructure assets and infrastructure businesses. Most notably, it's through the decarbonization of power generation and the transition to renewables, and the types of financial support mechanisms that are being provided by governments around the world to accelerate that transition to a lower carbon fuel supply. As it relates to our outlook for the asset class, we think 2022 could be an attractive vintage year for infrastructure as we think about several key themes supporting the asset class. First, we think valuations are attractive on average across the asset class as infrastructure is trading in line with broader equities, whereby historically infrastructure is traded at a premium on a cash flow multiple basis. We think several of the trends that I've discussed and will continue to discuss here, such as dry powder, such as the fundamental trends that are benefiting the asset class, as well as relatively attractive monetary policy and accommodative monetary policy and fiscal policy, should again lead infrastructure to trade at a premium. So a couple of those themes to discuss. First, decarbonization and energy transition. Clearly a number of opportunities for us, both in the owners and operators of renewable assets, so companies that own and operate renewable generation like solar and wind, companies like NextEra Energy here in the US, or companies that own transmission assets like E.ON in Germany, who are building transmission and upgrading transmission to support that renewable energy development. Digital transformation of economies is another key theme as societies continue to rely on data and data in a mobile sense and the movement of data around the world. So businesses and governments, as well as individuals, continue to see exponential growth in data usage. This will benefit cell tower companies who need to densify networks, as well as data centers who, of course, store data, both primary data and backup data. And then a third theme is just the continued strong demand that we see for goods and services. 2021 was very focused on goods and a goods-based economic recovery. We've started to see a transition to services as we've moved through the year. We expect 2022 to be a bit more balanced between goods and services, and some real interesting ways to play both of those in our universe. First, on goods, it continues to be freight railways and marine ports. And as we think about services over time, it will be more of the passenger transportation type businesses like airports and toll roads.
Well, thank you, Ben, and thank you, Jason. I will shortly address any shareholder questions on the financial reports and any general matters, bearing in mind that we will separately consider the remuneration report and other items of AGM business later in the meeting. Mr. Rohit Khanna, the signing audit partner from the company's external auditor, EY, is present and available to answer any questions relevant to the conduct of the audit and the preparation and content of the auditor's report for the year ended 30 June 2021. We now move to questions. Joe, are there any questions or comments about the company's operations or its financial report at this time?
No, Chair, we've received no questions, either written or audio, for this item of business.
Thank you, Joe. We'll now move to the next item of business. Item 2 on the agenda concerns adoption of the remuneration report. The Corporations Act requires all listed companies to submit a remuneration report to their shareholders for consideration and adoption by way of a non-binding resolution. Argo Infrastructure's remuneration report is set out on pages 13 and 14 of the annual report. The remuneration report is relatively short, outlining the company's remuneration of each non-executive director. As the company is externally managed, the managing director and all other executive key management personnel are not paid by ALI, but are remunerated by the manager, Argo Service Company Limited, as part of their roles with Argo. The non-executive directors receive a fixed base fee, do not receive additional fees for participating in board committees, and are not entitled to any other remuneration other than legislated superannuation entitlements. I now move the motion that the remuneration report for the year ended 30 June 2021 be adopted. For your information, details of the proxy votes received on this resolution appear on the screen. Please note that this resolution is advisory only and does not bind the directors of the company. However, should 25% or more of shareholders vote against the remuneration report for 2 years in a row, then shareholders at the second AGM will be asked to vote on whether all directors should stand for re-election. Joe, are there any shareholder questions regarding the remuneration report?
No, Chair, we've received no questions, either written or audio, for this item of business.
Thank you, Joe. Shareholders, can you please submit your vote for this item of business if you've not already done so? We'll now move to the next item of business. Item 3 on the agenda concerns the re-election of a director. Andrea Slattery retires by rotation in accordance with the company's constitution and, being eligible, offers herself for re-election today. The details of Andrea's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Andrea's re-election, as they consider she is well qualified to be a director of the company. I now invite Andrea to briefly address the meeting. Andrea.
Thank you, Russell. Good afternoon, shareholders, ladies and gentlemen. I'm privileged to stand today for re-election to the board of Argo Infrastructure. It has been an honour being an inaugural independent director, and I continue to be very excited about the future prospects of Argo Infrastructure. I'm passionate about infrastructure, diversification, and the ability for Australian investors to access international investments easily. At Argo Infrastructure, we set our strategy and vision to be a high quality, true to label, Australian listed investment company with a global focus, providing long-term total returns of capital growth and dividend income to Australian investors. I'm an independent, non-executive director with 29 years of service on public and private companies and government advisory board, with expertise in finance, infrastructure, renewable energy, innovation and investment. I co-founded the SMSF Association in 2003 and played a leading role in the significant growth and importance of the SMSF sector, and have been a business owner, financial services advisor and strategic and governance consultant during the journey. I'm currently an independent non-executive director of AMP Limited and AMP Bank, the Clean Energy Finance Corporation, and I'm deputy chair of the Woomera Prohibited Area Advisory Board. I have been a member of many federal government advisory committees, including the Innovation Investment Partnership, the Industry Working Committee, the Stronger Super Committee, and the Shadow Ministry Infrastructure and Innovation Committee. I was awarded Woman of the Year at the Australian Financial Services Awards in 2014 and AFL Mother of the Year in 2009. My credentials include a Masters of Commerce and Bachelor of Accounting. I'm a Fellow of the CPA Australia, the Institute of Company Directors and the SMSF Association, and I'm a member of the Chartered Institute. I'm an inaugural alumni of the Harvard Business School Corporate Director Certificate and will be one of the first non-executive directors in Australia to complete the Global Competent Board ESG certificate this December. I continue to have confidence in Argo Infrastructure's long-term investment thesis, business model, and our portfolio manager, Cohen & Steers, and their investment process. I would be honoured to be re-elected today as an independent non-executive director of Argo Infrastructure to continue serving you as our shareholders. Thank you very much.
Thank you, Andrea. I now move the motion that Andrea Slattery be re-elected as a director of the company. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. I now move to questions. Jo, are there any questions regarding Andrea's re-election?
No, Chair, we have received no questions, either written or audio, for this item of business.
Thank you, Jo. So, shareholders, please submit your vote for this item of business if you've not already done so. We will now move to the next item of business. Item 4 of the agenda concerns amendments to the company's constitution. The company's current constitution was adopted at the time of its incorporation in 2015 and is available to shareholders on the company's website. The company seeks shareholder approval to make 2 amendments to its constitution to ensure it complies with the current regulatory landscape. The special resolution to be considered is that, quote, that for the purposes of section 136(2) of the Corporations Act and for all other purposes, the constitution of the company be amended in the manner set out in the explanatory notes to the notice of meeting. The first proposed amendment is to clause 8 of the constitution and will entitle the company to record the names of 4 joint holders of a security in respect of a CHESS holding instead of the current 3. This amendment will provide consistency between the constitution and the functionality of the ASX's new CHESS system which is scheduled to go live in April 2023. The second proposed amendment relates to clauses 32 and 33 of the Constitution and will clarify that a general meeting may be held by the company in one of three ways. 1, at a physical venue. 2, at one or more physical venues, also using technology commonly referred to as a hybrid meeting. Or 3, using virtual meeting technology only, where all members participating using online facilities, also known as a virtual meeting. It is our intention to hold physical general meetings whenever it is safe and compliant with government regulations to do so. However, these amendments will ensure that the company has the flexibility to conduct virtual meetings in the future if needed. The proposed amendments are administrative in nature and have been reviewed by the ASX. The board unanimously recommends that shareholders vote in favour of these amendments to the Constitution. I now move the motion that the company's constitution be amended in a matter set out in the explanatory notes to the notice of meeting with effect from the close of meeting today. For your information, details of the proxy votes received on this resolution appear on the screen. This is a special resolution and as such, a majority of 75% in favour is required to pass this resolution. I now move to questions. Joe, are there any shareholder questions regarding the amendments to the Constitution?
No, Chair, we've received no questions, either written or audio, for this item of business.
Thank you, Joe. Shareholders, please submit your vote for this item of business if you've not already done so. We'll now move to the next item of business. Item 5 of the agenda relates to the re-adoption and renewal of proportional takeover provisions. This item of business concerns the approval of the proportional takeover provisions contained in the company's constitution. The special resolution to be considered is that, and I quote, that the proportional takeover provisions in clause 25 of the constitution of the company be re-adopted and renewed for a further period of 3 years, commencing on and from the day this resolution is passed, and the constitution of the company is amended by reinserting all of clause 25. The effect of clause 25. Clause 25 of the company's constitution has the effect that, providing that shareholders representing a majority of shares for which votes are cast at a general meeting must approve a proportional takeover offer for their shares in order for any such offer to be effective. Clause 25 only applies to proportional takeover offers and has no application where an offer is made for all of a shareholder's shares. If a proportional takeover offer is received, the directors are required to convene a meeting at least 15 days before the offer is closed to consider a resolution to approve the proportional takeover offer. The offerer and persons associated with the offerer are ineligible to vote. The full text of clause 25 is set out in the notice of meeting. By virtue of the Corporations Act 2001, clause 25 ceases to apply 3 years from the date it was last renewed, which was 22 October 2018. A resolution is accordingly proposed that clause 25 be re-adopted and renewed for a further period of 3 years from the date when the resolution is passed, so as to give the majority of shareholders the right to approve or disapprove any takeover offer for less than 100% of their shares. The potential advantages and disadvantages for directors and shareholders if clause 25 is readopted and renewed are outlined in the notice of meeting, and I do not propose to repeat that information at this time. The directors consider that it is in the interests of shareholders to have the right to vote on a proportional takeover offer, and accordingly recommend that the readoption and renewal of clause 25 be approved at this meeting. I now move the motion that the approval be given to readopt and renew the proportional takeover provisions in the company's constitution. For your information, details of the proxy votes received on this resolution appear on the screen. This also is a special resolution, and as such, a majority of 75% in favour is required to pass this resolution. Joe, are there any shareholder questions regarding the readoption and renewal of the proportional takeover provisions?
No, Chair, we have received no questions, either written or audio, for this item of business.
Thank you, Joe. Shareholders, please submit your vote for this item of business if you've not already done so. That brings us to a conclusion of the items of business on the agenda for today's meeting. I will very soon close the poll, so if you've not already done so, please submit your votes via the Lumi platform. We will announce results of the polls to the ASX later today. I thank you for your virtual attendance today, and I look forward to your attendance at next year's AGM. I now declare the polls closed, and I declare the 6th Annual General Meeting closed. Thank you.